and good evening. Yeah, so today I'm going to record, right, our chapter on merchandising activities. Yeah, so I hope that you can spend a few some time, right, maybe 1 hour, to watch this video before we go into the discussion of this topic. Yeah, so merchandising activities. So what we have done all this while is that we have looked into an enterprise, all right? For example, in the last class, where we have an enterprise having a workshop, yeah. So what they do is that they repair workshop. So when they repair workshop, they do earn revenue. So that you have to record as a revenue, and then expenses incurred in delivering that services will be recorded as your expenses. Yeah, but today we are going to look into another topic, which is a merchandising activities. Yeah, merchandising activities is different from the previous activities because merchandising activities is involving a buying and selling of goods. Yeah, so when you have buy and sell of goods, so the activity is buying and selling, not only provide services. Yeah, so you are in the when you sell goods, then you are already in the merchandising activities. Yeah, so when you have a merchandising activities, the accounting, all right, the preparation of the accounting is a bit different as compared to those who only provide services, right? Why? Because under merchandising activities, you will need inventory. All right, you sell goods, so that goods that you sell is known as an inventory. Right, inventory is a current asset. Yeah, so take note that your inventory is your current asset. Okay, so when you have a inventory, then of course before you sell, you can sell goods, all right? Sometimes we call it as your product. Sometimes we call that as your, which is also what we known as your stock. Yeah, stock. So, but in this textbook, they use it inventory as a term for your stock. Yeah. So either way, it's the same thing. All right. The asset that you sell to your customer. Okay, so whenever you have stock, it means that in order for you to sell, you must first have the stock, right? So then we'll see that whether the goods that you want to sell, do you actually make it yourself? Do you manufacture the goods or the inventory, or do you get it from some other people? All right, means that you buy stock from others and then you sell the stock to your customer, right? So when you have that, all right, then you have to look whether you have before we going to purchase, means that you can have another option that you either purchase or you manufacture, right? So if you manufacture your own product, then the accounting would be more complex, whereby you have to have your cost of manufacturing, right? Then only you have your cost of goods sold. Yeah, so that's a different. But what we're going to look into now is talking about if you have instead of manufacturing. All right, so we look at here, if we're talking about merchandising activities, all right, you have cash, and using the cash you buy your inventory. So when you buy, it means that you buy from your supplier, right? Supplier. So if you have your supplier, you buy your inventory. Either you buy by cash, so it means that you pay cash, or you buy on account. It means that you take the goods first and then you pay later. All right, so either way, all right, whether you go by cash or you go by accounts payable. All right, so here you will have your accounts payable here. Yeah, um and then using the stock that you have now, you want to sell. All right, you sell to customer. And when you sell to customer, your customer, if the customer pay you cash, then what you do is that you're going to credit, means that your inventory goes out, then you're going to receive cash. All right, but most of the time in a merchandising activity, most of the time, sometimes I would say depends. All right, if it is end customer, then most likely you have accounts receivable. Yeah, so rather than they pay you now, all right, they get the goods, then you pay now, but they will pay you later in the future. So maybe 30 days or 60 days, it depends on the agreement, right? So then the customer receive the money, the goods, and later pay you. Then later only you receive your cash. Right. So that would be the cycle. Means that from having cash, or maybe you don't have cash, you get the inventory from your supplier, and then you sell the inventory to your accounts receivable. Right. So that's the cycle of a merchandising company. Then what we have? Okay, now we're looking at whether merchandising, all right, if you manufacture the goods, all right, so you can either manufacture inventory, all right, so it means that rather than you buy from a ready to sell condition, right, merchandising company is what we're referring to. You buy from supplier and then you sell to your customer. But talking about manufacturing company, they actually manufacture the inventory. So the cycle of the accounting is longer, whereby you will have to manufacture first, then you have the inventory, then only you can sell to your accounts receivable. Right? Then you get the money later. So then you also have cost of manufacturing involved. Yeah. But in this chapter, we are going to concentrate on merchandising company. All right. So talking about merchandising, all right. So we call it as a cycle, lah. All right. So normally what we do is that we have manufacturer, right? Manufacturer. Then manufacturer will sell to wholesaler. Okay, now we have problem. Okay. Then we have a wholesaler. Wholesaler sell to retailer. Retailer sell to customer. So this is what we call the supply chain of goods. Yeah. So manufacturer will produce the goods and sell to wholesaler. Wholesaler sell to retailer. Retailer sell to customer. And remember that at each supply chain here, everyone makes a profit. So that's how you make money, because at every supply chain you will buy at a lower price and sell at a higher price. So in between you have the cost of the goods and you have the selling price, right? So that's why we are going to look into in this case your selling price and your cost. Dia jadi dah. Okay, hold on ya. Let me close this first. Let me see whether, let's open again. Okay, so remember that business exists is to make profit. So what we have here later, we'll see that what you're going to have is what you must know what is your cost.
It's 4 o'clock.
Dia ada lagging sikit tu. Your cost and your selling price. Doesn't work. Okay. All right. So wholesaler are the one who buy merchandise from several manufacturers and then sell this merchandise to several retailers. Right. And retailers sell merchandise directly to the public. So when talking about the accounting, all right, the accounting system, in this case merchandising, all right, you will see that you will have additional, not only you have revenue from your sales, but you also have to identify your cost of goods sold. Yeah. What am I doing here? Let me see. All right, you have cost of goods sold. I tak nak. Okay, you will have your COGS. So this is what we known as cost of goods sold. Well, now the pen is not working well with me today. Supposedly closed. I'm not sure what is actually stopping it from. Okay. So what do we have here? I wish that I will just cancel this page. There's none. How do we Okay, change color. Let's change color to uh, this color. Okay, let's make it it's very small. Okay. So when we okay, let's just right. This one is just ignore this page, yeah. Okay. So let's again start. All right. Just now I said that we always have from the manufacturer to retailer, manufacturer to wholesaler, to retailer. Mm, right, it doesn't work well. Save. Okay, where is it? Okay, so you will have your cost of goods sold, right? Of in this case, let's see. Right. So in a merchandising company, you have your revenue from sales, then you minus your cost of goods sold. Sometimes this cost of goods sold, we call it as a COGS. Yeah, COGS. Uh, all right. Cost of goods sold represent the expense of goods that are sold to your customer. So how do you know your cost? Of course, when you purchase from your supplier, you purchase the goods at cost. All right. When you sell, all right, you must identify what is the cost of the goods that you sell, and as you compare that with your sales, all right, your sales will always be at a selling price, and your cost of goods sold will always be at cost. So when you have your selling price minus your cost, then you will have your gross profit. Yeah. So from the gross profit, you minus expenses. So these expenses normally expenses incurred in operating the business, not directly expenses which is related to the cost of the goods that you sell, right? And from there, you have your net income. So from here, you see that under merchandising activities, you will have your COGS, and then you come to your gross profit minus your expenses, then only you have net income. So previously, if you're talking about not a service company, right, they only have your revenue minus expenses. Why? Because they don't have any cost for the goods that they sell, because they don't sell goods, they sell services. All right. So in that case, merchandising, you will have to know what is the cost of the goods sold, because then you're going to compare the cost and the selling price, that is your gross profit, and then take into account all other expenses incurred by the company in arriving to your net income, right? So normally, all right, you refer to the gross profit in order to measure the profitability of the sales. All right, so you will only make profit if your sales price or your sales is more than your cost of goods sold. All right, remember that no business exists to make losses. Yeah, so that's why there will always, most likely, you will have a gross profit. But if your expenses, right, or operating expenses is higher, then you may have a net loss. But most likely business, you have a gross profit, and have never seen a business having a gross loss, right? Never seen that before, because you normally will sell your goods at a higher price, higher than your cost. Otherwise, you don't have to do business. Yeah. Okay. Um. Okay. I hope that, let's see if I can open up again my chapter 6. Give me some time. Canvas chapter 6. Let me see if we have this. I hope that it works well today. Okay. Okay. All right. So then we have your, so when you talk about purchase of your inventory, all right, you remember that you are talking about you purchase inventory, and normally when you purchase, it will involve cost, your accounts payable, right? So your accounts payable, or sometimes you pay to your supplier by cash, so that will have your cashier. So means that what is not working is not the computer, but most likely is the pen itself. Okay, I change the. All right, sometimes it's your cash rather than accounts payable. But when you sell your inventory, and normally you will create accounts receivable, or all right, you will receive your cash. All right, so similarly, either you create accounts receivable or you receive your cash. Okay. And remember that when you buy at cost. That's how you're going to record your cost of goods sold. And when you sell at profit, then you record that as your sales. Yeah. But in order for you to do all the recording of your purchases, of your sales, all right, and how to decide whether you're making a profit or not, all right, it depends on the inventory system which is applied by the company, whether the company is using perpetual inventory system or they are using periodic inventory system. So we are going to go through, all right, these two types of inventory system and see how the inventory system affect the recording of your business transaction. Yeah. So we are going to see when you purchase your inventory, all right, how are you going to record that under perpetual, and then when you sell your goods, how are you going to record that under perpetual, and then if it's a periodic, then you're going to look at how you buy and sell your goods, right? So once you're very clear about the system, you're going to look also on the returns policy. All right, it's common in business merchandising. All right, whether you buy your inventory or you sell your inventory, there could be returns. It means that if you were to purchase goods, it means that if the goods does not fulfill the requirement that you have set before, you may return the goods to the supplier, right? So you're talking about the goods here is your inventory. So when you return, then what will be the accounting treatment for the purchase returns, right? Similarly, when you sell goods to your customer and the customer is not satisfied, or maybe there could be some damages to the of the inventory or the sales that you made, all right, the customer may want to return their goods. So in that case, it will involve sales return. Okay. And then you also have in this chapter a topic on discounts. All right. So it's common that in business, whenever you sell, all right, normally you give discounts to your customer in order to encourage them to buy more. All right. So sometimes to encourage them to buy more, or sometimes to encourage them to pay you as soon as possible. All right. So that's why they give you discounts. So when you talk about discounts, you are going to look into the accounting treatment, whether you are going to record the transaction, right? Whether when a company give you a discount, you're going to record that at gross or you're going to record at net. So I will only show you one method. We are going to look into the gross method. Yeah. So gross method, whenever there's a discount, how are you going to do the recording for the discounts that you receive from your seller, right? And at the end of the chapter, it looks into the financial statement analysis, delving into the net sales and the gross profit margin. All right, looking at the net sales and the gross profit margin, how it will tells you about the performance of the company. So when you do your financial statement analysis, it's more or likely is to see the performance, right? The performance of the company. Right? You're looking at the performance. Okay, it doesn't work. How am I supposed to do this? It's okay. Okay. Now, where were we? Okay. So now let's go into the perpetual inventory system. All right. So we have two systems. Number one is perpetual inventory system. The other one is what we call periodic inventory system. Yeah. So what's the difference between that? So let's go into that differences before we go into okay, who actually do perpetual? Who should actually do a periodic? I think that is okay. Selecting an inventory system. All right. Which one the company should go for, whether they want to go for a perpetual inventory system or they want to go for a periodic inventory system. All right. So under perpetual, normally large company with professional management. Right. Why? Because you'll see later that Under perpetual inventory system, they do a very detailed recording of every transaction. All right, whenever they purchase their inventory, they are going to record inventory account. All right, then they have a lot of movement actually, yeah. So most of the time, the one that use perpetual inventory system, they will utilize a computerized accounting system. All right, most of the time, rather than they do a manual recording, all right, they will just do computerized. For example, they use a barcode. All right, whenever they purchase inventory, everything is computerized, recording of the accounts payable. All right, so all these are done by big companies. All right, uh, uh, and on top of that, all right, the perpetual inventory system provides the management with real-time information. Real-time information means that at any point of time, if any of the manager or any of the top management wants to know about the inventory system, that can you can give the data. For example, today at this time, what is our, how much do we have inventory? All right, how much inventory do we have in our store, for example? So you can give the figures here and then, because why, everything is computerized. All right, an item normally is a high per unit cost. For example, uh, those motor vehicle. All right, so we're not talking about the small item like a basic amenities, right? Okay, so in this case you use perpetual. Okay, low volume of sales transaction or a computerized, so it means that remember it's a high volume, high per unit cost. So and then if you do not utilize a computerized system, means that you can only manage small volume. All right, it means that you can only have low volume of sales transaction. So in other words, it says that here, all right, if you're talking about small volumes and high cost per unit, all right, so you might want to use perpetual. However, if we are talking about very high volume, you may not be able to use a perpetual inventory system if, unless you use computerized system, because you need to take every details of the transaction. All right. Merchandise stored at multiple location or in warehouse separate from the sales site. So in this case, we are talking about a big companies that have many storage, all right, warehouses that keep all the inventory. So in order to standardize, all right, the system, all right, in order to know at any point of time how much inventory from all the warehouses, right, you will have to use the perpetual. And in order for you to do that, you have to use a computerized system. Coming to your periodic inventory system, all right, this one is more relevant for a small company. All right, small company run by owner. All right, they only use the manual system. All right, they only records inventory and a specific product sales not needed in daily operation. So they don't know, they don't want to know, okay, at any point of time, how much is my inventory? No, they don't need that information, right? Inventory with many different kinds of low cost items. This one is very special, specific. We're talking about retail shop lah. Yeah, retail shop, right, that sell so many small items, small value items. So most likely they don't want to spend so much time to record low cost item, all right, and the volume is very high. So what they do is that they go for periodic inventory system. They don't have to do all these detail things lah, yeah. High volume of sales transaction and manual accounting system, and all merchandise you only have one site, right? You only have one site for all your goods store. Yeah, so you don't have to think about the total sale or the total inventory that you have in multiple sites. So in that case, you only have one warehouse, for example, or one small store. All right, then you should be using periodic. Yeah, and again, this one is more relevant for a small volume cost item. High volume but small, a low cost item. Yeah, so that is for periodic inventory system. Okay, let's go into perpetual system. Okay, are you ready? Okay, for perpetual system, right? How are you going to record? So remember just now when talking about the system, okay, we always talk about mana I punya campus ni? Yeah. So we always about how to record when you purchase, when you sell your goods, and then when there is a returns. Yeah. So these are the things that you want to look into, right? When you have the recording. Okay. So let's try. Okay. Talking about perpetual. Please do well, do well. Okay. Does it? I pula nak kena adjust untuk dia. I don't think it's working today. Okay. Dah langsung tak ada. Now it doesn't work at all. Well done. Okay. So when you purchase, all right. So in this case example here, we have a perpetual inventory system. When you purchase 10 region 21-inch computer monitors on account from Okawa Wholesale, right, the monitor costs 600 each for a total of 6,000. How get you 6,000? 600 times by 10 units of computer monitor. Yeah. And payment is due in 30 days. So when you see that payment is due in 30 days, it means that, all right, you are going to create an accounts payable. Why pay? Why accounts payable? Because you're going to pay later. All right. And remember that when talking about a business, when you purchase your inventory, you don't buy from just one accounts payable, right? You may have many suppliers for the goods that you sell. So that's why here you see that when they put accounts payable, they put the name of the company, Okawa Wholesale Company. Yeah. So then maybe later you have accounts payable differently. All right. So you have to record your accounts payable different for us, one accounts payable for every supplier. So in this case, how are you going to record under perpetual? When you purchase your inventory is your stock. So this is your current asset. So if you look into your financial position, you will see that inventory is always under your asset. So when talk about inventory comes, when you buy inventory means that you are adding in your inventory in your company. So that's why inventory is debited, and then you have create accounts payable is a liability. That's why now we have accounts payable 6,000 on the as a liability. Okay. All right. So that would be your first transaction. When you purchase, you debit your inventory, credit your accounts payable. The second one is that you have perpetual inventory. On September 7, now you sell. All right. So when you sell, all right, there are going to be two transactions. Ameh solat. Okay, you have to record two transactions. So I wish I could use my pen here, right? When you purchase, now, okay, now it doesn't want to. Okay, now it's working. Right, when talking about perpetual, okay, please do well. Okay, perpetual. So number one, where you purchase your inventory, what would be your, you are going to debit your inventory account, which is an asset, right? Asset, debit, and credit your accounts payable. So accounts payable is your liability, right? So in this case, you debit 6,000 and you credit another 6,000. Tadi dia dah okey dah kan? Tiba-tiba dia tak nak pelang. Tak ada tutup. Carikan satu tutup lagi. Okay? Okay. Number two. Right? The example says that now you sell your inventory. So how are you going to record the sale of inventory? I'm not sure what is actually stopping it from. Hmm. Okay, when you sell, this one is more important than the perpetual because many students actually got it wrong. Yeah. So when you sell, you're going to have two entries. Aduh. Now what? Is it working or not? My computer hang or not?